On April 28th, Bucephalus Capital, and soon to be Prophecy DeFi, entered into a services agreement with 9Point Partners through its digital asset group. 9Point is one of the leading asset management firms in Canada and has over $8 billion under management. Through this agreement, 9Point will provide Bucephalus with strategic advice and insights into the blockchain and cryptocurrency sectors as we originate and evaluate investment opportunities. We are very fortunate to have Alex Tapscott with us today, who is the Managing Director of 9Point's Digital Asset Group and is the Chair of our Advisory Committee. Alex is one of the world's leading authorities on blockchain. He is an entrepreneur, author, seasoned capital markets professional focused on the impact of Bitcoin, blockchain, and other digital assets on business and financial markets. Alex is the co-author of the critically acclaimed non-fiction bestseller Blockchain Revolution, which has been translated into more than 15 languages and has sold more than 500,000 copies worldwide. He's also the editor and co-author of Financial Services Revolution. Alex is sought after worldwide for his expertise by business and government audience. He has delivered over 200 lectures and executive briefings for global corporations and financial service firms. His TEDx talk, Blockchain is Eating Wall Street, has been viewed over 750,000 times. Mr. Tapscott has also written for the New York Times, Harvard Business Review, the Globe and Mail, National Post, and many other publications. In 2017, Mr. Tapscott co-founded the Blockchain Research Institute, a global think tank investigating blockchain strategies, opportunities, and use cases. Mr. Tapscott is also a CFA charter holder. This morning, we disseminated a press release which announced that we have entered into a definitive agreement to acquire 60% of Layer 2 Blockchain, which is a company that operates in the decentralized finance sector. This is a transformative new direction for the company and marks our first investment in the decentralized finance sector. Alex is here to talk about the emergence of this new sector and the exciting growth opportunities that exist. Alex's presentation, Blockchain, DeFi, and the Future of Finance. Alex?
Sure thing. Thanks, John, for that wonderful introduction. Can everybody hear me? Cameron, maybe just give me a thumbs up. Okay, terrific. Well, I'm very delighted to be here today representing 9Point Partners. And 9Point Partners is very pleased to have entered into this strategic relationship with Prophecy DeFi. What I'm going to do today is discuss our thesis on blockchain in the DeFi space and why we're so convinced that it is going to have a really profound impact on financial markets and on the economy as a whole. So with that, next slide, please. So my prepared remarks should take about 10 minutes, and then I'm really looking forward to interviewing Andrew Young from Layer 2 on this subject. So we're entering into this era where technology is becoming increasingly ubiquitous all around us in every respect. We hear about machine learning, about green energy, and about autonomous vehicles. And each of these new technologies is going to have a big, profound impact on the world in which we live. But there's one technology in particular that I think is going to help to animate this new second digital age, to basically act as an operating system for the new economy. Next, please. And that's this thing called blockchain. Now, I think by this point in time, most people are familiar with this concept. Blockchain is not exactly the most sonorous or pleasing word, but it has become industry standard language at this point. It's our view basically that blockchain represents nothing short of the second era of the internet. And let me explain what I mean by that. Next slide. When you use the internet today to send and move and share information, you're not sending an original, unique thing. You're sending a version or a copy. So if you think about an email, you can send an email to one person and send the same email to someone else. If you put an entry into Wikipedia, it's available for all to see. When you tweet something, anybody can read it. So the internet is a really powerful tool that's a lot like a printing press for information that everybody gets to have and control. And that, by and large, has been a really positive thing for the world. It means that people can access information more easily and communicate to more people more easily. And broadly speaking, that's a positive thing. Next slide. Except when it comes to things that have value, things like money or financial assets like stocks and bonds, being able to send a copy is actually a terrible idea. So if I, instead of wanting to send an email, want to send money to someone, it's very important that when I send it, they know that they have the only version of that money, and I can't send the same $20 or whatever it is to someone else. Similarly, if I sell a share of a stock, it's important that the buyer knows that I can't sell the same share again. And this applies to basically any kind of asset. So it's great for us to have a printing press for information, but it's not so great when everybody has a printing press for value or for assets. Next slide. And this is a specific problem that computer scientists have been trying to resolve, basically, which is how do you ensure that when you move something of value online, that you aren't leaving behind a copy or another version? And because it's such a difficult problem to solve, through the growth of the first era of the internet, we've still basically relied on middlemen or intermediaries to perform a bunch of important steps. So banks, brokerages, but increasingly large technology conglomerates, even governments. And these entities perform some essential services. They decide who, or they determine who's the buyer and the seller, or the sender or the receiver. They perform all the business logic, contracting, record keeping, clearing, settling, and so forth. And they create trust. And overall, they've done an okay job, but they have some specific limitations. They're centralized, which makes them vulnerable to hacking or to attack. They add cost and friction to the system. They exclude big parts of the population. There are billions who still don't access banking or other financial services. And most troubling is that they've basically captured most of the value that's been created from the Internet of Information. Next slide. So what if the Internet was entering a new era? From an Internet of Information to an Internet of Value. Well, in 2008, an anonymous person or persons named Satoshi Nakamoto devised this concept called Bitcoin. Bitcoin is something I'm sure everyone's familiar with. Bitcoin was designed to do something very simple. It was designed to act as cash for the internet, a way to move value and to store value peer-to-peer online without the need for an intermediary. Seems like a simple thing, but this was very difficult because of that double spend problem. And what was so amazing about Bitcoin really is that it worked. And it's worked so well that it has set off a spark that's really caught on like wildfire and caused people to consider, well, if blockchain can work for Bitcoin, could it also work for other kinds of assets? So that is the promise of this technology. Next slide, please. And it is the subject of a lot of the work that I've done in this space. As John mentioned in the introduction, I'm the co-author of a book called Blockchain Revolution, which has been translated into over 15 languages. And they say, better lucky than smart. The book came out right around the time that a lot of people started to care about this concept, and were looking for an easy to understand guide on what this next big thing really was. The book basically describes how this new technology platform called blockchain was going to disrupt a number of different industries. And it's maybe worth spending just a quick moment to discuss how exactly all of this stuff really works. So basically, if you think about Bitcoin, so Bitcoin transactions are happening constantly between parties every so often. They are bundled together into this thing called a block. That block is then broadcast to everyone who's connected to the network. Certain participants on the network use large computing power to basically prove that the transactions in each block are valid. Those people are called miners. You hear about this concept, Bitcoin miners. And for doing that work, they are rewarded with new Bitcoin. Once all the transactions in each block are validated, that block is added to the preceding block, which is connected to the block before it, going back to the beginning of time. And that record of transactions acts as an immutable and authoritative, basically record of the truth that everyone can trust is accurate. So what blockchains enable is for trustless transactions between people. So if they can work for a thing like Bitcoin, could they also work for other kinds of assets? And it turns out that basically every single industry in the economy has assets that could ultimately be affected by this. Financial markets, art markets, even elections. Votes are a lot like transactions. When you vote once, it's important you can't vote again, that you can't cast a vote for another person, and that the record remains private and immutable, right? That someone can't hack that record and send the vote somewhere else. So when you think about this concept that way, you realize that this technology has the potential to change basically every asset class in the world. Next slide, please. Focusing on financial services, in the analysis that we've done, we've basically identified the 9 things that the financial industry does. Everything from establishing identity to enabling people to move money, to store value, to access credit, and ways to raise capital if you're an entrepreneur, ways to create financial markets for assets. Each of these different elements of the financial industry is poised for disruption. Next slide, please. And this was the subject of another book that I wrote last year, which basically described this DeFi opportunity. It's called Financial Services Revolution. Next slide. There's this very helpful metaphor that we use in describing the opportunity. So for those who aren't familiar with this is a Rube Goldberg machine. It's basically, it's a joke, but it's an apparatus that performs a million different steps, very ridiculous, mostly unnecessary. And in the end, it solves a very simple problem, like it cracks an egg or opens a door. In many respects, this is how large swaths of the financial industry work today. When you clear and settle, or rather when you buy something from Starbucks, for example, you tap your card on the card reader, you may think that the value is moving from you to the merchant, but it's not. It's going through the acquiring bank for the merchant, your bank, a payment processor, a card network, maybe an international settlement system like SWIFT or ACH. And it's not taking 3 seconds, it's taking 3 days, and it costs the merchant anywhere from 1% to 10%. That's the interchange. When you buy a security, if you're lucky enough to have access to a brokerage account, which billions of people do not, you buy the security, and you think, well, now it's in my account, because it's cleared. Well, no, it hasn't. It has to go through a settlement process, which involves brokerages, clearinghouses, custodians, and so forth. So the digital sort of veneer of financial services obscures this old system that is built on technology that is 30, 40, sometimes even 50 years old. Next slide. So some people might ask, well, this is fintech, right? This is the technology that's changing financial services. Well, it's true that a lot of what blockchain and DeFi promises is similar to fintech and overlaps with fintech, but there's a lot beyond just what we think of as fintech that's going to be disrupted here. If you think about blockchain changing the art market through NFTs, non-fungible tokens, unique, scarce digital fingerprints that you can ascribe to digital assets. Is that DeFi? Is that finance, or is that something more? If you think about using blockchain as a way to record votes on a proxy for a shareholder register, is that fintech, or is that something more deeper and more significant? So the key thing here is that whilst they do overlap, blockchain and DeFi is actually much larger. And I think that's an important thing to understand, because a lot of people think about blockchain and crypto and DeFi as somehow a subset of fintech, like it's within fintech, when actually the opposite is probably true. Next slide, please. We also hear about cryptocurrencies. There are thousands of these things. Why do we need thousands of currencies? Valid point. It turns out that many of the digital assets that make up this nascent industry aren't in fact currencies. They're not designed to be a medium of exchange, a form of money in the way that, say, dollars are. Some of them are intended to be like that. Bitcoin is a key example. It is a store of value in a unit of account and a medium of exchange that's used for purchasing goods and services, for speculating, for storing value, investing, and so forth. Many other kinds of crypto assets perform something different. Ethereum, something others might be familiar with. It's the second largest crypto asset by size. I say asset, not currency, because it's something a bit different. Ether, which is the native token of the Ethereum network, is a way to pay to run applications and to run transactions inside of applications that run on the network. In other words, think of Ethereum like the grid of a city, and the applications are the cars that are taking you from point A to point B, moving money from one spot to another, allowing one lender to access someone who's a borrower, and so forth. The ether is the gas that goes into the car that powers the application. And the gas that powers the application is, instead of paying traditional financial intermediaries and other traditional third parties, to enable the movement of value and the execution of agreements between parties online. And there are various other kinds of crypto assets as well. Crypto fiat currencies and stable coins is another one. These are tokens that allow you to move money peer-to-peer instantly online in a matter of seconds or minutes, but are pegged to dollars. So if you're concerned about the volatility of Bitcoin, you can use stable coins as a way to overcome that. This is the industry that we're looking at right now in the DeFi space, and it's the one that is the most exciting. Each of these different kinds of tokens could potentially change and transform virtually every kind of market. And within the DeFi space, there are really interesting examples of basically software that is replicating the lending function of a bank, that's replicating the stock market part of the financial industry that is disrupting how we think about insurance, connecting underwriters to policyholders and so forth. And these kinds of assets help to animate all of that. Next slide, please. In fact, there's a continuum that I like to use, which I think is sort of helpful in understanding this. So the way the world works today is the world of centralized finance. We know about banks, there are central banks and currency issuers, and large entities like SWIFT that are basically bank-run consortia that help to move money around the economy globally. The next stage of this evolution is the world of open finance. So cryptocurrency exchanges like Binance, Coinbase, crypto asset custodians like Gemini and others, and crypto asset ETFs and ETPs are taking a big leap forward into the future. But the end game here is a thing called decentralized finance, or DeFi. And this is essentially software running online that allows us to do everything that the financial industry does today, but in a way that is more inclusive, connects to more people who don't have access to a bank account, that is more useful, that offers different and better services, and is potentially cheaper and faster and more efficient. In the same way that the internet transformed information industries, we don't look at the yellow pages, we look at Google. The world of DeFi could potentially do the same thing to banks and traditional financial services companies. The idea of going into a bank branch or even signing online into your online banking will seem potentially as foreign to our kids' generation, or even sooner than that, than it would be for someone from my generation, and I'm only in my 30s, to open the Yellow Pages book. Never done it in my life, and maybe that reveals my age, but that's the way the world is going. Except instead of information, which are small, discrete elements of the economy, search, media, publishing, et cetera, we're talking about a technology that could change insurance markets, capital markets, and much more than that. And those are, frankly, bigger opportunities. It is the bleeding edge of technology innovation today. It's also the bleeding edge of financial innovation today. And in my humble opinion, the team at Layer 2 are really leading the way in this respect. And so, next slide. With that, I'm very pleased to hand it back to you, John, so that we can continue on with the program. Thank you, everybody.
I would like to now introduce our next speaker, Andrew Young. Andrew Young is a true blockchain entrepreneur and experienced operator and innovator in decentralized finance. Andrew and his team successfully founded their own DeFi protocol, SportX, and were an early member of the DeFi Network group. This team has a track record of success managing significant capital within the DeFi space. Andrew specializes in analyzing the economic incentives and tokenomics of new DeFi protocols. Andrew regularly engages in DeFi-related podcasts and interviews, and often publishes research reports examining the crypto space. Andrew, please tell our audience about Layer 2 blockchain.
Thank you, John, for the introduction. It's my pleasure to be here with you. My name is Andrew Young. I'm the CEO and a co-founder of Layer 2. Alex has provided a very high-level overview of the decentralized finance space. I'll be presenting a short but detailed introduction into the DeFi space and get a little bit more into the nitty-gritty of how the space actually works as of today. And then I'm pleased to be following up with a fireside chat with Alex afterwards. Next slide, please. So over the last 2 years, the crypto asset class has really hit the mainstream. Just by looking at the overall market cap, it's grown from $200 billion to over $1.5 trillion as of today. But unlike previous rallies, this rally has been sparked by both retail and institutional adoption. And what's particularly unique is that the rally is being driven by real-world use cases, particularly in the DeFi sector, rather than just pure speculation like before. Next slide, please. So while Bitcoin and Ethereum obviously dominate the headlines, and I should add Dogecoin as well, one of the fastest growing sectors of crypto right now is decentralized finance, i.e. DeFi. DeFi encompasses a variety of different blockchain-based financial applications that are built on smart contracts, which are essentially software programs directly on the blockchain. The four main applications that are actually live as of today are trading, lending, predicting, and derivatives. DeFi is essentially, you can think of it as essentially the financial system of this new crypto economy that Alex was describing. And as crypto continues to grow, the DeFi market share just continues to increase as well. DeFi has actually grown over 60x in the last 12 months, from under $1 billion in total value locked to over $60 billion today. Next slide, please. Nearly all of this DeFi adoption and growth has historically occurred on the Ethereum blockchain. Ethereum was the first one to launch with smart contracts, and so essentially the ecosystem has been built around Ethereum. However, this explosion in usage has led to a massive increase in the network cost of using Ethereum. Ethereum has yet to actually scale their technology, so it's still bound by about 15 transactions per second, which is not even remotely enough to support a global financial system. This means that simple transactions that used to cost pennies on Ethereum, it costs essentially a little bit of ether or gas every time you use the Ethereum network. So transactions that used to cost pennies now cost tens of dollars. This isn't a big deal for institutions though, but it's increasingly pricing out traditional retail participants from the sector. The result has been that DeFi growth and innovation is increasingly shifting to layer 2 and other alternative non-Ethereum blockchains, such as Polygon. These alternative and layer 2 blockchains are typically far more scalable than Ethereum and give users a lower cost way to participate in decentralized finance, albeit typically with a trade-off in security. Next slide, please. So rapid growth and the rise of these new blockchains has fragmented liquidity in the DeFi sector. And so what that's led to is it's led to extremely attractive opportunities in the DeFi space on these new networks. All DeFi applications require significant capital, technical expertise, and infrastructure in order to function efficiently. This creates opportunities for a professional DeFi-focused team to generate returns and operate in the space. We see 3 main opportunities in the space today. The first is liquidity provisioning. So essentially what this involves is you deploy capital and or partner with decentralized exchanges, typically they are automated market makers, in order to generate returns and actually accrue ownership stakes in these newly formed exchanges. It's kind of like the equivalent of being one of the first market makers on the New York Stock Exchange when it just launched and actually getting a big stake in the exchange for your participation. The second big opportunity is cross-chain protocol arbitrage. It's a fancy word, but essentially what it is taking advantage of systematic differences in lending rates across these different lending platforms that Alex described. And you can generate large yields from that. And then finally, the big opportunity we see is network staking, validation, infrastructure. This is similar to proof of work mining, if you've heard of those, but it's for proof of stake based networks. And so what that means is you actually use tokens to mine instead of supercomputers. The end result of all these activities, though, is that a focused DeFi operator can generate very high yields in this space while accruing ownership stakes in a basket of different DeFi applications. Next slide, please. So with that being said, DeFi is very complex, difficult, and quite dangerous where it is today. So there are these are big barriers preventing the vast majority of participants from accessing these opportunities. The first is just straight up complexity. So the decentralized finance industry was effectively started in the last 12 months. Its true birth was about 3 years ago in 2018, but as an industry, it's essentially come to prominence in the last 12 months. And layer 2 protocols and alternative blockchains to Ethereum have just started gaining traction in the last 6 months. This has created tons of complexity for anyone looking to enter the space who's not even in the crypto space, particularly for people who are in the crypto space, but even more particularly for people outside of the space. There's a massive learning gap to get involved. The second big thing is technical risk. So these are the headlines you can see of different DeFi applications and crypto applications being hacked. So many of these decentralized finance protocols are new and highly experimental. So many of these projects actually launch with even completing a technical audit, which leaves them open to potential hackers and loss of funds. Technical due diligence in this industry is absolutely vital. Finally, just sheer speed of growth. The crypto ecosystem is growing so rapidly that it's essentially a full-time job at this point just to stay informed on what is happening. The global nature of the crypto ecosystem requires operators to track projects across different countries, time zones, and languages. given the novelty of even Bitcoin to many traditional financial participants, it seems unlikely that the opportunities in the sector of decentralized finance are going to be crowded in the near term. We believe this creates an opportunity for the Layer 2 team, as we're uniquely positioned to capitalize on these opportunities, given that we have years of technical experience operating within the DeFi space and have been in the DeFi industry since its inception.
Thank you, Andrew. Alex, now if I can invite you back into the conversation for you and Andrew to engage in a discussion about DeFi and Layer 2.
Thanks, John. Yeah, Andrew, I thought that was the perfect complement to my remarks, and I appreciate the level of detail that you went into there. You mentioned that the industry is only 12 months old, and yet it's already disrupting a number of areas that you pointed out. So we're seeing this innovation accelerating and happening at a much faster rate than I think a lot of people expected. Why is DeFi so disruptive? I think you're on mute.
Oh, yeah, thank you. So that's a great question, Alex. Thank you. I think DeFi is so disruptive for three main reasons. The first is that essentially we're moving from a financial system that is opaque and extremely closed source to an open source ecosystem. It's kind of like it essentially opens up the industry for developers. It essentially turns a traditionally very stodgy industry into a tech industry. And I think there's three main benefits that come from this shift. So I think the first one is quite obvious. It's just globally accessible financial markets. So anyone with internet connection can access the DeFi market. That's not true of the New York stock market or any traditional equity markets. They're actually quite closed off to many countries. Whereas in DeFi, as long as you have an internet connection, you can access DeFi. The second is that it turns finance into an open source development platform. So think Linux meets Royal Bank. Developers can build on DeFi without asking permission. Everything is open source, which has led to an extremely rapid development in technology. And then finally, the third thing, which is my personal favorite, is this idea of community ownership. So control and ownership in these platforms is democratized. As you use these DeFi platforms, you earn tokens which represent ownership in them. And so effectively, these platforms are actually owned by their community.
Fascinating. And so what area specifically of the financial industry do you feel is the most poised for disruption?
Well, I share your belief that DeFi will disrupt the entire financial industry, but I think in the short term, the most immediate disruption is happening on the trading side. Mm-hmm. So if you just look at the volumes of these automated market makers, which is like a kind of DeFi exchange, sort of like the stock market, like you said, the volumes on these exchanges have actually exploded over the last 6 to 12 months. And they're actually, the volumes on Uniswap are now almost surpassing the volumes on Coinbase, which is pretty crazy to see in such a short amount of time. And I think the reason why this is happening is just this idea of having a globally accessible 24/7 decentralized exchange that anyone can trade against is pretty revolutionary. And what's really interesting about the DeFi side is that it allows anyone to participate on the supply side by passively providing capital to these decentralized exchanges. So it allows anyone to essentially contribute to these networks.
Yeah, it's fascinating. I mean, in 2016, when Blockchain Revolution came out, we talked about the potential for decentralized exchanges, the idea that you don't necessarily need some company in the center of a transaction between parties, establishing trust, keeping records, and so forth, because we know from how Bitcoin functions that blockchains are a way to do that. But at the time, you may recall, it was pretty experimental. And yet, within a matter of years, thanks in large part to Uniswap and the subsequent imitators that have duplicated its code and have launched new markets, that these things can scale incredibly quickly. To keep everything in context, Coinbase's market cap is bigger than that of most of the Canadian banks. And what you just said is that Uniswap, which is basically just a collection of smart contracts, effectively code that self-executes on the blockchain, is doing more volume than a company that's that valuable. And we're talking about markets that are in the billions of dollars. So what I find really fascinating is that, well, if we can create marketplaces for crypto assets where billions of dollars can change hands peer-to-peer online with very little friction, why can't those same principles and that same technology apply to other markets like stock markets, for example? So anybody at the TSX group and others, and they're our partner here, and thank you for hosting this, should be paying attention to this space, because it is, in many respects, the future of how we're going to make markets in a lot of assets. So having said all that, all the positive side, what are the barriers in your mind for DeFi to really reach its potential? What are they in nature? Are they technical limitations? Are they governance issues? Are they regulatory? I'd love to hear your thoughts on that.
Yeah, no, that's a very good point, and thanks for the question. Yeah, I think in the short term, actually, the main problems preventing DeFi from reaching its potential are technology related. So the obvious one is just the lack of scaling on Ethereum, where the vast majority of DeFi activity happens. Means that DeFi, every time that DeFi experiences a surge in adoption, the costs of using the network see a similar explosion, and effectively makes it unusable for the vast majority of society to use. So, for example, the cost of sending a simple transaction on Ethereum in April hit $20 at one point. And for much more complex transactions is much higher. Mm-hmm. So this essentially prices out the vast majority of people from using DeFi. And it's also part of the reason why we think, and we're seeing so much DeFi activity move to these alternative blockchains and layer 2 networks, because they just offer better scalability and cheaper costs. So yeah.
Yeah, well, you can imagine a world where these different blockchains are linked to one another, so that each one individually maybe can't handle all of the volumes of the New York Stock Exchange, but collectively working together, they can. Or in fact, maybe not the New York Stock Exchange, because we've seen how Uniswap has scaled, but markets that are even larger than that. So tell us about layer 2. You talked a little bit about the strategy, about this idea of seeking out alpha and opportunities in these new blockchains and these new markets that are popping up to address, actually, in many respects, the issue that you just raised. So what would you say is the company's focus in the DeFi space? And one other part, which is, what would you say is your competitive advantage as well?
Yeah, thanks for the question. Yeah, that's a great question as well. I mean, I think, so layer 2 is focused on servicing these rapidly emerging DeFi networks by providing capital, network staking, and also operating supporting infrastructure like bridges. So in particular,
why don't you just describe quickly what that is? What's a bridge, Andrew?
Yeah, thank you. Yeah, so bridges, essentially, like you said, as the crypto ecosystem becomes rapidly fragmented, so we're going from essentially one chain, which is Ethereum, to multiple chains. Users that want to bridge assets if a user wants to use a different network, for example, Polygon is the most used one right now besides Ethereum, they need to essentially bridge their assets over to this other network. You can almost think of it as Ethereum is one bank, and then if you want to use the services of this other bank, you need to send a wire transfer to transfer your assets from the Ethereum bank to the Polygon bank. And so that's essentially that service of essentially the way these to do that type of service, you need to essentially have a network of nodes that process these transactions, and that's something that layer 2 has capability to build. To answer your other question though as well on what we're focusing on, like I said, we're focused mostly on deploying capital into automated market makers and lending platforms, network staking for proof of stake based networks, and then operating this other supporting infrastructure. And yeah, I guess the other question, the competitive differentiation is really, to me, it really comes down to team. There's very few people who are plugged into the space, at least that I can see at the level that we are, from actually starting a DeFi protocol and being in the space. And so I think and our team is very well rounded in terms of having the business and the technical side. to stay on top of these things and operate in the space effectively.
I agree. There's an old joke about the LinkedIn, not an old joke, a recent joke about the LinkedIn job post. Looking for DeFi engineer must have 5 years of experience. There is nobody out there that has 5 years of experience, except for maybe you and your team. It maybe wasn't called DeFi before that time, but I remember in 2017, you and I having conversations about these new emerging proof of stake networks and ways in which they could ultimately support these kinds of applications, but also how there were opportunities to capture value from their growth. And here we are. There's a very famous saying by Victor Hugo: "There's nothing so powerful as an idea whose time has come." 2017 was not the time for DeFi. A lot of the underlying technical infrastructure, know-how, market was underdeveloped, and yet here we are today. And it feels like it really is the marriage of execution and good timing on your part. So kudos. One more question just to wrap this up. I think you and I could talk for an hour or longer on this. I think we already have many times in our lives. Let's fast forward 5 years out. So DeFi today is still very early stage. It's finding product market fit. There's obviously lots of growth and excitement. But what does the financial system look like in 5 years as a result of this innovation? Has it really changed that much?
Yeah, no, that's a really good question. I think it's pretty much impossible to know what this industry will look like, to be honest with you, given that DeFi was essentially invented in the last couple of years. And it's quite literally being invented every day in front of our eyes. There are a couple things, though, I do feel confident in. I think finance is going to increasingly look like the internet software industry. So what I mean by that is technology and product will drive revenues rather than legacy distribution channels. I also think that technology will be default open source rather than closed source as it is currently. Because if you believe that technology and product drive growth like I do, being open source is actually a huge competitive advantage because it allows you to track developers to your platform, which at the end of the day are the most important resources.
It's a brilliant answer. I've actually never really heard it expressed so clearly. And I think that's the promise of this. And I think the leaders of the old paradigm, the masters of the universe that are the executives in major financial institutions, are probably quaking in their loafers as they hear your vision of what the future might look like. So that it looks like we're almost at 5 o'clock. Andrew, that was a really great primer and a nice sort of snippet and insight into what you're up to at Layer 2. Certainly, it's an exciting time to be at the cutting edge of the financial industry, and that's clearly where you've placed yourself. So, as I said, kudos and best of luck. And with that, I'll hand it back to you, John.
Thank you very much, Andrew and Alex, for your insights and presentations. I believe our shareholders now have an appreciation of the size and scope of this opportunity.